Hey, this is Charles Blair, the Mad Scientist, with another Real Deal Meetup TV video. In this video, I'm going to take you step by step and show you the exact Real Deal Meetup deal review questionnaire that we've used to close well over 300 real estate deals in my real estate business. Now, this exact questionnaire is going to take you step by step through the process of what you say when you're talking to a homeowner. This is going to be a powerful video, and I'm going to take you to it right now. All right, as you can see right now, we're at what I like to call my Real Deal Meetup deal review script. And as a matter of fact, this is the exact script that I've used to close well over, I would say, 300 plus real estate deals. It has all the questions and details you need on this one script. And as a matter of fact, the one that I'm going to actually give each and every one, this one here, it's a fill in the blank script that actually has a formula at the bottom that actually figures out the Mayo formula. So let's go ahead and delve right deep into it. The top part of the script is basically the property details, where it consists of the property address. Well, let me close this up. Where it consists of the property address, owner's name, phone number, and so on. This part right here is pretty much self-explanatory. What I want to delve into is what I like to call the meat and potatoes of this script, which starts off with the question, what can you tell me about the property? Now, I'm going to go into these questions that's on the script, but I'll also go into the psychology and what I'm thinking when I ask the questions. Let's start with the first one. Mr. Seller, what can you tell me about the property? Well, with this question, the main thought I have in mind is see if I can get the seller to open up and give me as much information as they're willing to do. I want to find out the motivation of the seller. That's the reason behind that question. I want to also use it as a precursor to get information that I'm going to later ask on this actual script. I may get it early, such as bedrooms and bathrooms and condition of the property. So that's my psychology behind the first question on the script, which is, what can you tell me about the property? Secondarily, of course, I'm going to ask about the bedroom and bathrooms. The next question asks a very important question, and it's a very important statement. And I like to call it my money statement, because it goes into the motivation of the actual seller. And here's the question. Sounds like you have a nice property. Why are you selling? Now, the key here is you want to get the motivation behind the sale. Now, let's say the property isn't nice. Well, it sounds like the property been in your neighborhood for a number of years. Or should I say, sound like the property has been in your family for a number of years. Why are you selling? You see how I switched that up so that it's not about how nice the property is. It's about the length of time in which they own the property. The key point here is getting to the motivation that the seller has in order to sell. The next question, how much property like yours sell for in the area? Now, the reason why I want this question answered is because I'm trying to get a sense on the telephone as to what the value of the neighborhood based on the phone conversation. Now, of course, after I get off the phone, I'm going to go ahead and do my due diligence. I'm going to check comps and so on. But I want to know if the seller has any idea what value is in the neighborhood. Not only that, but this goes into my two-step negotiation strategy, where I'm actually giving them, or should I say negotiating a price on the phone, but then I have the opportunity to renegotiate that price once I get to the property. Now let's go to question number 3 here. Does your property need any repairs? Self-explanatory. Once again, I'm going into the actual repairs that's needed. I'll ask about when was the last time the kitchen was updated, bathrooms, and so on, so I can get a sense of the repairs, and I'm going to get a sense on what my offer is going to be with that seller. My next question, how long have you owned the property? Now, this is a great question. The reason why I want to say that is because it goes into the actual designation of whether or not there's equity in the property or not. I'm trying to determine whether or not there's a deal here based on the length of time of ownership. And if the property's been owned for 22 years, I want to find out, is there a second mortgage that was placed on the property after that prior to that time frame, or is there a situation in which there's another number for the length of time that could get in the way of the equity question? So the reason why I'm asking this question is whether or not I'm trying to determine if the property has any equity built in already. Now, next question. Is the mortgage current? Great question, and it goes to the effect of whether or not the property is in foreclosure or not, or if the property mortgage payment is late or not. Now, this could be a huge motivational key here, and I want you to check this one off. The reason behind it is basically you want to find out if there are any type of monetary issues going on with the family, or should I say the seller, that is a determining factor in regards to the motivation of the seller and what that issue is. Is the mortgage current? Gives me that information. Not to mention, in Maryland, we have a law what's called the Protection of Homeowner in Foreclosure Act. And that law, in simple, just states that if a property is over 60 days late and you're aware of the fact that the mortgage is over 60 days late, you as an investor must stop in your tracks and have that owner contact an agent or an attorney in order to sell that property to you. You're unable to actually buy properties that are currently in foreclosure when the seller is living in the property. Now, if it's a non-owner occupant, absentee owner, absolutely you can buy those all day. But if the property is 60 days late on the mortgage, should I say the property owner is 60 days late on their mortgage, you have to have that owner contact an agent or an attorney, and then you're able to buy the property through those individuals. Next question. How many months behind are you? Now, once again, this goes into the motivation. The more months behind they are, the more likelihood there is motivation. 3 months as opposed to 8 months, 6 months as opposed to 12 months. Not to mention it goes into your exit strategies. Could this be a good deal for a short sale? Is there issues that are involved in this property that will allow me to do subject to, and so on? So that's the reason why I'm asking that question. Next question. How much do you owe on the mortgage? This goes into whether or not there's equity in the property. This goes into whether or not you can structure this deal as a subject to. This goes into you figuring out whether or not what the ARV is as it compared to the actual mortgage balance, and so on. Next, I want to find out how much is your mortgage payments. Now, the reason why I want to figure that out is it goes into a couple of exit strategies. If the mortgage payment is low, I may want to do a subject to deal on this deal if it makes sense. I may want to do a buy and hold deal. I may want to do a deal in which I could create some type of owner financing. That's why I'm asking that question, how much is your mortgage payments? It also gives into the effect of whether or not there's a first and second mortgage on the payment. So there's a lot of thinking behind this question. As a matter of fact, there's a lot of psychology behind all the questions, and I want you to keep that in mind. But the question of whether or not, or should I say, how much is your mortgage payment, is very important when it comes to exit strategies. And here's the big one. How much do you need to sell? Now, of course, the reason why I'm asking this question is because I want to get an indication of the realism that the seller is in. Are they trying to get close to market value? Are they trying to give the investor some type of discount based on their sales price? Exactly where are they at in their number? And for me, it's going to help me determine whether or not this is a good deal as a wholesale to rehab, or should I take this deal and look at it as a buy and hold, as a rental, and so on. So it's going to help me understand the exit strategies when I got that number in place. Next one. How did you come up with that number? Which is another great question that goes into the psychology. I want to know if this number that they gave me regarding how much they need to sell, was it based on facts? For instance, I may have a homeowner that says, well, the neighbor across the street sold his house for X amount of dollars, and that way I know my house looked just as good as his, if not better. Mine should sell for the same. Now, when I hear an answer like that, I'm thinking in terms of my two-step negotiation. Well, they say that the properties sell for $85,000 around the way. I'm going to use that number against them if it's not true. So I'm able to make an offer based on the numbers they give me, but I'm also able to renegotiate the offer based on my due diligence. So I'm not leaving any money on the table. I'm not making any stupid or silly offers. The offer I make finally will be the offer that I need to make that will make this a good deal for me, the real estate investor, and a good deal for that seller if they're willing to accept my offer. And here's another strong question, which is the next question down. If you're unable to sell your property, what will you do? Now, this is going to go into the psychology in that mind of that seller, which will bring back what we like to call in marketing the problem aggravate solution module. Now, what that does is bring that seller to the mindset that this investor on the phone may be my only way of getting this deal done if I can't work with him. It brings back the issues that they have in mind if there is no solution, and it makes it a better situation for you, the investor, to get that deal. Let's move on down the actual sheet. Now, the next part of the sheet goes into exit strategy. Here I'm placing in exactly what exit strategies I could do based on the numbers. Now, based on the numbers of this deal that we have here, I see that I have a couple exit strategies I could work. I could do this deal as a wholesale deal where I'm wholesaling it to a rehabber. I can do owner financing on this deal based on the numbers. And I can do this deal as a buy and hold, as well as a subject to deal based on the mortgage payment and based on the numbers as well. So that's what I'm putting in this actual spot here with the exit strategies available based on the numbers of the deal. Now, buy and hold, I'm going to leave that one unchecked. But it also gives you, like I said, we already determined our exit strategies here. And you'll finally put in which exit strategy works best when you decide and once you get all the numbers after you've done your due diligence, which is in place. So let's just say this deal is going to be a wholesale deal. So in this actual box, I would click on wholesale. Now, let's scroll on down. And here's the meat and potatoes of it. This is where the actual power of this spreadsheet comes into play, because the actual sheet that I'm giving you guys will have a built-in calculator that automatically figures out whether or not it's a good deal or not. And here's where we go into the deal analysis part of the property. I'm going to first find out whether or not the property is in bankruptcy, and like I said, whether or not the property is in foreclosure. And we already discussed why that's the case. Now, based on the answers I've got, this property is neither of those situations. So we're going to jump down here to the actual deal analysis. Okay, we found out that the properties in the area sell for around $217,000, and we're going to use the R of 60% loan to value. So we've determined that 60% loan to value of 217 means that we need to start off our offer below $130,000. Now, once you fill in the blanks, it automatically does the calculations for you. Now, we also determined that based on the repairs that the seller gave us that they need to be done, that is actually $22,000 worth of repairs, and our finance costs based on the time, or should I say the actual time which is going to take us to sell the property, closing costs and so on, is going to be about $2,500. So once we put in all these numbers here, the spreadsheet here will automatically fill out that the maximum allowable offer, should I say allowable offer you can make is $105,700. Now, we've already determined that the seller needs $85,000 to sell. That's what the seller said. Absolutely, they want to walk away with $85,000. Now, you know that your maximum allowable offer says that before you subtract how much you want to make, you're at $105,000 right now, which means you as the investor, the wholesaler, if you want to, you could make as a profit the spread between 85 and 105, which is about $20,000. So is this a good deal? Absolutely, this is a good deal. because we already know that the seller wants $85,000 and that the actual formula, Mayo formula, which means the maximum allowable offer is $105,000, which means you have a $20,000 spread to play with in order for you to do this deal. And you could offer a full price offer to the seller and put it back out there to a rehabber at $105,000 and make $20,000 on this deal. So the final analysis, deal or no deal? Absolutely it's a deal. In fact, you better run over there to the property, because if you don't, I will. Next part of the actual form is, if needed, set an appointment. Let me tell you how I set my appointments. When I know I have a good deal, never leave the question of when you're going to see the property up to the seller. Push the property in your favor. And here's what I mean by that. My question after that will be to the seller: what time works best for you, Mr. Seller, today between 4 and 6? What time works better for you, Mr. Seller, between 5 and 7? You notice what I just did? I gave the seller a time frame for me based on my wanting to see this property as soon as possible, as opposed to the question which most new investors ask: when can I come see the property? And you get an answer next week. And by the time next week comes around, someone like myself or another investor would have came and went and saw the property. And not only that, but would have gotten the property under contract, and you would have lost the deal. So be very careful when you're talking to sellers and you're negotiating the time and date to go see the property. Last but not least, if the numbers don't make sense, set up a follow-up campaign. Whenever I'm negotiating with a seller, I leave them with an offer, and it could be a verbal offer, but I also tell them, Mr. Seller, I know you've said that my number won't work for you right now, but please keep this in mind. And matter of fact, keep my numbers in mind. If you should change your mind, please don't hesitate to give my company a call. Like I said, we buy a number of properties each and every month, and we'd love to do business with yours when it's a win-win situation for both of us. Take care, Mr. Seller, and I'll talk to you soon. Bye-bye. Now, that's the end of the conversation that I'm having when I'm filling out the seller questionnaire. And basically, if you use this seller questionnaire, you cannot go wrong. I'm going to say it again. If you use your Real Deal Meetup Deal Review questionnaire, you cannot go wrong, because it fills in the blank regarding the actual numbers in which you should buy the property for. It gives you each and every question that you need to ask to determine whether or not what type of deal or what exit strategy to use. And it allows you to put yourself in the best formula for success. Once again, this is Charles Blair, the Mad Scientist, signing out, and we'll see you at the next Real Deal Meetup event. Bye-bye.